Hi ladies and gentlemen, this is Game of Trades, and this is going to be a technical analysis of the S&P 500. So the S&P 500 closed the week red. We had a big reversal on Thursday and Friday, and we had a perfect clean rejection of the 40-week exponential moving average. That is a bearish technical development. This is an exponential moving average that does a great job at defining bull markets and defining bear markets. We can go further back on the S&P 500 and take a look at how price behaves in regards to this exponential moving average. And you can see it contains most of the corrections during a bull market. The price does tend to stay above this exponential moving average. Of course, in 2015, we had a period of consolidation, so the price dropped back down below. And we can go back to actual bear markets like 2008. You can see it tends to contain all the counter rallies during the bear market. You can see this is the 2008 bull trap. I'm going to zoom in here, and you can see we reversed off of it right there. We can quickly check on the 2000.com bear market, and you can see here each counter rally during this bear market reverses off of this exponential moving average. You can see we have one reaction here, one here, one here, two here, and another one right here. Now let's get back to 2020, and we can see that this rejection is a long-term bearish signal. Now, of course, this exponential moving average is not perfect. You're going to get whipsaw signals. You can see here in 2018, we had a crackdown below it and then a quick V-shaped reversal that went back above it. Then it bounced along and then we came back below it right here. Right now, my opinion is that the rally we've seen has been too powerful. It's been too greedy. And I think this rejection of this exponential moving average could mark the end of this rally. And I think there may be massive opportunities for a market drop, possibly down much lower, for those who have been patient enough to stick to the bearish case. Now, of course, if you are bullish, you're going to be looking for a breakout of this exponential moving average to continue the bull market, and that's likely to be accompanied with an MACD crossover. So this is really a make or break point for both the bulls and the bears. If we reverse off of here, it is very bearish. If we continue on higher, it is very bullish from a technical standpoint. Now, I also wanted to highlight the Fibonacci retracement levels from the top right here to the bottom. You can see we reversed at the 61.8% Fibonacci level. Now, this definitely means that this was one of the bigger counter rallies that you can see during a bear market. In fact, if you've been watching my videos, you'll know I've maintained my opinion that this is a counter rally in an ongoing downtrend. And so I still believe that we are due for a reversal. We did look for opportunities, shorting opportunities along the way up. We got stopped out once here, and we didn't get a sell signal along the way up until now, and that's what I'm going to discuss in this video. Now let's jump to the daily chart and see exactly what I'm talking about. Make sure to hit that like button if you enjoy this content. I try and make multiple market updates during the week, so don't hesitate to show your support for the channel. Now, it does look like our false breakout scenario that I discussed in one of my last videos. You can go back and check. It's called, I think there's false breakout in the title. I talked about this potential scenario playing out, a breakout of the 287 level. I said we'd likely get a stop loss raid above this level, and then we may get a reversal back down below it, and that would be a false breakout. The market's corrected back down below the 287 level, making this breakout out of the 287 level a false breakout. So you can't really twist that any other way than bearish. This really sucks in a lot of long investors to the long side, and then when the markets drop back down, their stop losses are hit, and that accelerates the selling. So as I said in my last video, this is a trade that I'm taking. This is the second short trade on the way up that I've taken, and that is on a break below this 287 level. So I am short going down all the way to the 272 level. I think this is a high probability trade. Of course, I still have my stop loss right above this level right here, and I'll be booking the majority of my profits at this 273 level, we'll call it. I like to put my targets right above the actual support level because it's generally very hard to exit out of the position right on the dot of the support level. You usually have to put your actual target right above it. And what's very interesting, I'm going to clear this chart. What's very interesting about this breakdown is that we have the exact same setup as the all-time high reversal. We had a wedge pattern going from December right here. We had a breakdown right here, then the markets reversed, backtested the wedge pattern, and then failed, got rejected off this backtest, and the markets dropped significantly after that. You've got the same scenario right here, wedge pattern, breakdown, backtest, rejection, and we'll see where this goes. We'll see. Now, if you are more into long-term swing trading, if you're more interested in taking one position and holding it for a few weeks, then the best opportunity I see from a short perspective on the markets right now is a break below this 272 level. You can see this 272 level right here intersects with this bull market uptrend line right here. You can't see on this daily chart, but this trend line goes back 11 years and we've broken back above it. And if we break back down below, that would be a false breakout and that would bring us a lot of selling back down. So if you short on a break below that intersection, that would also break the 50-day moving average right here. And so you'd have a perfect storm of breakdowns right here. And that would be your long-term sell signal to go down, possibly down to this level. Now, of course, that's because I have a bearish bias. If you are bullish and you're looking for opportunities to the upside, going long at this level is completely objective. This is a beautiful way to get a backtest of this trend line and buy long right above this trend line. And that would be the difference on this trade between the longs and the shorts. You'd have to wait for a breakdown if you are short. Now, this really would be a beautiful trade because not only you'd have multiple breakdowns of key levels, but you'd also have a switch in momentum. This is the MACD indicator. It's a momentum indicator. And so when you get these crossovers where the blue and the orange line intersect, you get a switch in momentum. You can see this happen right here. If you had bought at this crossover, you would have had a beautiful trade all the way to the top. If you had sold at this crossover right here, you would have had a beautiful trade all the way down to the bottom. And so if the markets just go down a little bit more, you'd have another bearish crossover. The momentum switches, breaks down all these levels, and we'd likely see accelerated selling. Of course, it's too soon to tell how far we'll go down. We'll have to see the price action as we go down. Obviously, I'll be making multiple videos about this, but for now we just have to be patient and wait for this potential break to happen. But if you want my opinion, I think the rally we have seen, again, of the lows has been too big. It's been full of greed. It's been too powerful. And I think that's going to lead to a very powerful leg down. That's how technicals work. It's called market volatility. The bigger the move down, the bigger the move up, and the bigger the move up, the bigger the move down. And so in these times, as a trader, you can potentially see massive opportunities. I'm going to again clear this chart here. But I do believe that, again, a short trade on a break below these levels is completely objective as long as you have your stop loss right above it. As long as you keep your stop loss right above it and you diversify your portfolio during this kind of investment. This is a huge part of investing, your asset management and your portfolio management. Diversifying them is a massive key to being profitable during both bull and bear markets. And I'm talking about precious metals, commodities like coffee that looks great for a potential bull markets in the next few years. Crypto, if you believe that that may be part of our future in the coming decades, and many other asset classes. Now that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.